Bob, let's start with you. What are you seeing?
Well, look, the important thing is we are continuing to see rotation into the ETF business and the passive business because the evidence is overwhelming. Active fund managers don't outperform their benchmark. That is the single most important thing. We have known this for 50 years, but it's only in the last decade that we've had vehicles that make it very easy, ETF vehicles, to make it very easy for people to invest. That's the single most important thing. We can debate, and Herb and I can debate about whether some of these ETFs are necessary. I have my own thoughts about them, but overall, this business is meeting a real need, Consuelo.
Herb, can you give me a sense here of what the catalyst has been for the retail investor? I mean, they're dumping a lot of names out of companies that they know and like and use their products.
Well, Contessa, I think that if you're a trader, not an investor, but a trader, in this kind of a crazy market, I guess ETFs are the easiest way to go. But there's a bigger issue here. And the bigger issue, which is something I wrote about the other day and which Bob and I talked about 12 years ago when I was at CNBC full time, was the question of whether what we're really seeing is something that's posing somewhat of a systemic risk to the system. Now, I raised that question back in the day, and I think I was probably wrong. But then we only had 1,000 ETFs. And right now, we have almost 9,000 ETFs. They had 1 trillion in assets, now 10 trillion. And what you really are seeing is this large, just the impact of passive investing, where you wonder, and I sit here and I obviously deal with individual stocks in my current go-round. I'm alongside, and you see so many companies that aren't part of the passive influx because they don't get some algorithm and some headline that gets them swept up in the trade of the day. And that creates great price dislocations and great opportunities. But meanwhile, we get back to this issue of ETFs. Have they exaggerated the move in the market?
Well, I want to ask you that. I mean, what do you think? What do you think, Herb, number one? And number two, when you think of ETFs and you describe them as passive, some are and some aren't.
Well, most still are. And the issue of the role of, the role of passive investing, which is what I think you have to focus on here, is, when you have that kind of power in the market, what is it really doing? And I would suggest, look, you have different types of ETFs. You have the issues, obviously, with leveraged ETFs. You have the issue with single stock ETFs, like those that trade, say, derivatives of Tesla. You have, so many different things going on right now that you have to raise the issue of what influence do each of these have in the marketplace? And do any of them or do all of them are they the tail wagging the dog, which, Bob, when you and I were talking about this a dozen years ago, that was the issue.
Yeah. I mean, a SPAC isn't it? Is a kind of cousin to an ETF. So as Herb was saying, they're single stock ETFs. I mean, a SPAC is kind of like that.
Yeah. Yes. So here's an interesting question. Most of the market is invested in passive indexed ETFs. There are a small percentage of ETFs that are in different things, 2%, and Herb mentioned them, leverage and inverse ETFs. Do we really need 3 times leverage inverse oil ETFs? I don't think so. But the market, to the extent that there is some people that do, fine. As long as it's not a systemic risk, and here Herb and I are in complete agreement on this, as long as it doesn't, and I don't see a lot of evidence of that. Single stock ETFs, I'm not a big fan of that. Did the world need 3 times inverse Tesla ETFs? I don't think so either. But the industry is changing and it's evolving, and now that it's been saturated with so many ETFs, they're looking for new business opportunities. I say fine, as long as I don't see evidence that it causes weird gyrations, either individual stocks or the overall market. I haven't seen that yet.